the Martin Luther King federal holiday since the markets were closed. I am Matthew Buckley, the Chief Investment Strategist here at WCI and founder and CEO over at Top Gun Options. It's going to be a very, very interesting week, folks. Obviously, this week, earnings are going to dominate what's going on Wall Street. We have a whole slew of S&P companies, about 65 S&P companies that are reporting. Futures indicating a little higher right now. We got Johnson & Johnson, Verizon, some airlines, some technology stocks. I think we got a McDonald's and a bunch of retailers reporting as well. So it's going to be a very, very busy week as far as earnings. But I've got to tell you that we've been a little soft on the earnings front. However, mainly last week, we saw a lot of financial stocks. A lot of financial stocks reported, and the headlines were the financials did great. And if you're a long-term TGO or WCI trader, you know that one of my mantras, one of my Whizisms, so to speak, is that financials and transports tend to lead the markets in and out of good and bad, okay? Obviously, transports and financials, if people are transporting stuff, shipping stuff with FedEx or the Baltic Dry Index or their home loans, credit card loans, obviously those are a couple engines in our economy. And if they're slowing down, that's bad. Well, the Baltic Dry Index has rolled over recently. FedEx warned and had a big miss. But the financials kind of look good. But you got to dig underneath the headlines. The financials weren't necessarily that strong. There was a lot of GAAP, non-GAAP, smoke and mirror, some accounting gimmicks, and then you had to read also their forecast about growth in the future here. So not necessarily an earnings season that's setting the world on fire, but this will be an inflection point in the markets this week, in my opinion. Today, not much on the economic flight schedule calendar. Same thing with tomorrow, not seeing too much. We are getting a lot of information out of China, and we'll talk about that in a couple seconds here. Thursday is going to be a big day. We get weekly unemployment claims, obviously. We get some manufacturing PMI. Then we also get HPI, which is it's a housing indicator with mortgages backed by Fannie and Freddie Mae. And then this will be a big one, existing home sales. Okay, that'll be a very, very big one for the market because, again, a Whizism was financials and transports tend to lead us into out of good and bad. Well, in new 500-pound heads believe what? That housing is one of those key drivers. And if housing's starting to roll over, then this thing is getting long in the tooth here. So Thursday will be a big day in the market. However, I got to tell you that China, coming on some interesting events out of China. China Credit Trust Company warned investors that, hey, by January 30th, we might not be able to repay you. They might actually default. And another Whizism, getting a lot of Whizisms this Tuesday market outlook, is that we will never see a Lehman Brothers or Bear Stearns in China. They learned from us. They saw our 2007, 2008 train wreck, and they know better. However, and they can step in. The government can step in with their size 12 boot and prevent anything from happening. Well, we're starting to hear some grumblings that the People's Bank of China, the PBOC, might actually let this happen to bring in risk, to kind of show people that we might not always ride in and save banks here. Very, very interesting. So it sounds like they actually did really, really, really learn a lot from our 2008, that they might not run in and save everybody. This could be very dangerous, though. If the market sees that and goes, oh boy, they're not going to do United States and prop up capitalism, there might put some risk and fear into the market. Not that it's going to collapse, but that, hey, we better start paying attention here and actually care about the fundamentals. So very interesting development. I'm going to be watching this one very closely. It would be the reverse United States. It would actually be what we should have done. We should have let a lot more companies fail. Bear Stearns, the Lehman Brothers. Bank of America took over the Thundering Herd, Merrill Lynch. They should have been allowed to fail. Countrywide, the government essentially came in with their size 12 boot and forced companies to acquire bad companies, and there's lawsuits still going on to this day. So I'm going to be watching this like a hawk to see what happens here, what China lets happen with China Credit Trust Company, whether they come in and save it or whether they just say, investors knew about the risk and they can suck it. So going to be very interesting, folks. And obviously on the military front, our head cheese, military cheese in the Pacific, very, very blunt speech the other day. I'm surprised he hasn't been fired yet or shipped off to Alaska. We're losing dominance to China in the Pacific. They're also building a second aircraft carrier. They already deployed their first carrier battle group. They got 2 more in the pipeline after they're building this one. They are turning into a serious world power here. And I'm also bullish on them, like you read about in Bullish Magazine. Okay, a lot of bullish positions on China for a simple reason that they're over going to take the United States by 2016 as the global superpower, in my opinion. So while as an American, I kind of, weep at that. As a trader, I really don't care. I'm going to make money off of it, okay? China surpasses U.S. as world's largest trading nation last week. Boom. We're number 2. So, going to be an interesting week. I'm getting ready for a weekly options live trading session. Had a great week last week. Very interesting. Crushed it on a couple trades. And I'm also doing a joint weekly options primary live trade brief since we didn't have our weekly options brief on Monday. I'm going to do a primary live trade brief. And then very big event this Thursday after the close at 4:30. I want you to click on the link in this email and register for the Black Bay Group brief, okay? Todd Butterfield, the Chief Investment Officer for Black Bay Group up there in Chicago, up there in the Midwest, an RIA, Registered Investment Advisor, and also a hedge fund that they're launching February 1st. And we're going to have some breaking news about my role in the hedge fund. So I want you to show up, click on the link to register for this webinar Thursday at 4:30 Eastern to get a brief on the Black Bay Group's blended strategy. Okay, and this blended strategy outperforms the market when it's flat or goes down. And we talked about in one of our live trading sessions last week that Goldman Sachs sees a 65% chance this year of a 10% pullback. Are you ready for that pullback? We are. And we're going to potentially profit on it as well. So 4:30 Friday after the close, click in the email to register. I got to run, do my live trading. Have a great week. Check back to Top Gun Options tomorrow for our Wednesday market set rip. Have a great day. Happy hunting. Make sure you hedge.